And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. Hope your morning is going great. But right here, we're kicking off with the markets now. We see oil prices slip today as concerns about fuel demand in top global oil consumer, United States and China, offset bullish sentiment about tightening supplies from any OPEC plus cuts and a resumption in U.S. buying for reserves. Brent crude futures, that fell about 62 cents to $73.55 a barrel in early trade, while U.S. WTI crude is trading at $69.48 a barrel, down 56 cents, about 0.8%. Last week, both benchmarks fell for a fourth consecutive week. That's the longest streak of weekly declines since September 2022 over the concern the United States could enter a recession on significant risk of historic default within the first 2 weeks of June. And to the grains market now, Chicago corn futures lost ground today, while soybeans, that was little change, with both benchmarks weighed down by U.S. government forecasts for an all-time high harvest. Winter wheat prices edged higher, holding on to last session's strong gains as expectations of crop losses in the drought-stricken U.S. plains underpinned the prices. The most active corn contract on the Chicago Board of Trade, CBOT CV1, that fell 0.5% to $5.83 for half a bushel in early trade, and soybeans SV1, that was unchanged at $13.90 for a bushel. KC hard red winter wheat futures, KWV1, rose 0.6% to $8.82 for a bushel after climbing 4.2% last Friday. Russia threatened to quit the agreement on May 18th over obstacles to its grain and fertilizer exports. And the four parties discussed UN proposals to extend the deal. That was last week, Thursday. But looking out for how all of that plays out. And some company news now. Sun King, an international solar energy company that designs, distributes, and installs and finances solar energy, has launched its new solar inverter in Nigeria. The solar inverter, specifically designed for the Nigerian energy market, will replace expensive fossil fuel-powered generators, thereby providing homes and businesses with seamless, clean, and affordable energy. Take a listen.
Solar-powered lights in Nigeria in 2011 to producing a series of solar panel products to meet the electricity needs of Nigeria, Sun King, an international solar energy solution company, is introducing a new product, Sun King Solar Inverter.
Thank you very much. Wow.
The company hosts key players in the energy ecosystem to showcase its latest invention. With 12 years of operations in Nigeria, the managers speak about the evolution of the brand.
Looking at the business as a whole, if you look at the global footprint, we currently service customers across 40 countries globally, and we have head offices across these countries that you have here, both in North America, Africa, West Central and East Africa, and Southern Africa, and also Asia.
Sun King has a range of lanterns that serves this need, and we would have several products, and they get better and better progressively as we go.
Ladies and gentlemen, this is the Sun King.
And then the unveiling.
This is where you clap, this is where you clap. I know you can't clap with your whole hand up, but keep clapping, keep clapping. Absolutely beautiful.
Our solar inverter is a hybrid product, so this ensures that it's able to be charged through two means, either through solar panels that are placed on the roof of a building, or it can be charged through the grid. So once the grid is available, the inverter is charging. If the grid is not available, the solar panels also charge it. So what this helps is that customers and businesses can have uninterrupted power supply, in that when power cuts out, the inverter takes up because it's already having backup power in it already.
Sun King takes ownership of various aspects of the supply chain. We look after the raw materials that go into our products, and we also have quality engineers in the factories to assess the ongoing process of manufacturing and ensure that whatever we get is of the absolute best quality.
The solar inverter is said to generate up to 2,000 watts of electricity. It has two sources of energy, solar panel and grid power. It also can power appliances directly. In addition, the Sun King solar inverter has a battery designed to last 10 years, and the product comes with a 3-year warranty.
What will energy do for you?
The company says the new solar inverter is the initial offering in the planned series of high-performance solar systems it intends to make available to Nigerian households and businesses.
Thank our friends from the REA. We thank everyone for coming out today.
And now to our first conversation. Well, the countdown to official commissioning of the 650,000 barrel per day refinery, that's next Monday. President Muhammadu Buhari, so May 22nd, will commission the Dangote Refinery right here in Lagos State. All eyes on that right now, next week, Monday. Well, joining me now is Mr. Bismarck Rawane, CEO of Financial Derivatives Company Limited. Great to have you on the show, sir. Good morning.
Good morning, Laddie, and good morning to all viewers. Thank you.
So the official commissioning is getting really close now. Next Monday, will this mark the end of PMS importation in Nigeria? And will PMS subsidy finally be a thing of the past here in Nigeria, this commissioning?
Okay, thank you very much, Laddie, for having me again. Let's break this down into what people can understand. The commissioning of the refinery project is a major milestone in Nigeria. What will the impact of this be on the Nigerian economy, and what will the impact of this be on the West African and Central African economies? Firstly, it's a 650,000 barrel per day, the largest single train refinery in the world. It is cutting-edge technology, so it brings you the amount of refined products you get per barrel of crude is of the highest quality and highest input-output ratio. 3, it is a major investment, which means that the guys behind this had a lot of courage and confidence in the system. 4 is that this refinery is also partly owned, I think 20% in all, owned by NNPC. Now, 2 is that the refinery business is a downstream business. The E&P business, the petroleum business is right into 3 areas. There's upstream, there's midstream, and there's downstream. Refining falls into the downstream area. Now, what will the refinery do for Nigeria? Right now, what system we have is that we export crude for refining and it's brought back. So it has no direct foreign exchange impact as such, because the crude that you send for refining and processing in Rotterdam is what is brought back to you in terms of finished products. So it is the logistics cost and the transportation cost that actually. But today, refineries are based on a hub and economies of scale process. The bigger the refinery, the more efficient, the lower the average cost, and the more it impacts the society and the markets which it services. So in the whole of West Africa, there's no refinery hub. This will be the refinery hub for West and Central Africa. Now, 2, what are the other refinery hubs that you have around? There's a major one in India, there's Singapore, there's Rotterdam, there's Houston, and then across the world. Okay, now, what is it going to produce? Commissioning on 22nd by His Excellency the President. It's a modular system. That is, it's going to be phased out. Initially, you will have diesel produced. Essentially, then you will have dual-purpose kerosene, and before it gets to PMS down the road. 2, that the first benefit is that it reduces the amount of time people spend queuing up in different parts of Nigeria for petrol. So it increases output, downtime, and therefore it by indication increases productivity. Secondly, one of the major cost elements for Nigerian manufacturers and all the sectors across the country is logistics and distribution costs. By having these products produced in Nigeria, your distribution costs will actually decline, and therefore it helps to reduce inflation. Thirdly, the Dangote Group, like many other groups, I think are one of the highest tax-paying institutions in this country. So the refinery is coming at a time. One is partly owned by NNPC, Secondly, just like Aramco in Saudi Arabia. Secondly, it's owned by a group that has invested significantly and pays a lot of taxes in Nigeria. Because the logistics and distribution cost is reduced and the process is more fine-tuned, you are going to be creating jobs and therefore brings down unemployment indirectly and directly. And again, like I said earlier, reducing the number of queues that you have and the downtime people spend waiting to do that. The sectors that depend on petrol, kerosene, and diesel will have a boom because they can now, at least the product is going to be available at all times. And finally, what is how does it affect Central and West Africa, and how does it reduce smuggling of products and undermining the distortions to the macroeconomic stability of this country? One, because its cost is low. Two, because it's efficient to service the whole of West and Central Africa. So we earn more from exporting refined products than exporting crude. That is one. Two, the fact that the smuggling of petrol and this country can be described in a very unique way as a gangster's paradise. There's bunkering of oil, there's stealing and vandalism of food, there's smuggling of refined products. And the only area that we think things are pretty safe is in the LNG area because people cannot smuggle gas across and cannot steal gas from the pipeline. So these are the major areas. How will it affect our economy? To affect the economy, one, that it increases growth, increases productivity, increases tax collection. It makes it, and the states get more viable because they're getting more money. And then it comes back to the question of pricing and subsidy. Maybe I'll stop there now.
All right, all of that definitely, sounds good. The picture you painted for us. But how soon can we expect production after commissioning?
Well, I think it's going to be phased out. You'll see some production will start next month, and some it goes all the way down to early 2024. But the thing is that the investment. Let's understand something. Right now, the crude is brought by tanker to the refinery side, and the things are evacuated also using some very inefficient methods right now. But the refinery itself is cutting edge. So what Nigeria has to invest in is the pipeline infrastructure to bring crude to the refinery, and pipeline infrastructure and storage and depots to take it out to different parts of the country. When this happens, you'll see less trailers, less wear and tear on the roads, because what you'll be seeing is that you'll go to Mosemi, you'll go to Kaduna, get to Maiduguri, and all the depots that are there will be reactivated, and all the pipelines to the places will be reactivated. So wear and tear on roads are reduced, and also comes back to pricing. How do you price this? It has to be priced at the market. If not, you would have some production gains, but you would have a subsidy element in the business to still be distorting things. And I think that because of the efficiency, part of the cost efficiency will be passed on to the consumer. And relatively, Nigeria's economy will be better off. But again, the Dangote Refinery, or any refinery for that matter, is not a silver bullet that will solve all of Nigeria's problems. The way to look at it is that commissioning of this refinery and the commencement of production is a necessary condition for macroeconomic stability, but it's not a sufficient condition. You can have it and still have macroeconomic stability, but without it, you will have macroeconomic instability. So it's a necessary condition, but not sufficient to solve all your problems. I think that's a basic understanding of this.
All right, necessary but not sufficient. Well, thank you so much. Countdown to next week, Monday. All eyes on that refinery. Thank you so much, Mr. Bismarck Ruwane, CEO, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, we'll take a breather now. Business Morning returns in a moment. Welcome back. Well, the International Monetary Fund is warning that a significant reduction in foreign loans to Nigeria and other African nations is imminent as the global economy continues to experience new shocks and contractions. Well, joining me now for more is Mr. Ari Eisen, resident representative in the International Monetary Fund right here in Nigeria. Great to have you on the show. Good morning.
Thank you. Great to be here. Thanks.
So, sub-Saharan African economies, including Nigeria, strained by high borrowing costs and rising debt vulnerabilities right now. First of all, tell me, how did we get here?
Yes, thank you again for having me in the show. You need to look first at the global economy to understand what happened to the global economy. As a result of COVID-19 and later on the war in Ukraine, what you observe is an increase in global inflation. So inflation in most of the countries in the world has really picked up to unprecedented levels that we haven't seen before in the last 30 to 40 years. So central banks around the world started to tighten monetary policy, meaning raising interest rates to fight inflation. That, of course, has hit the financing costs for the countries who needed financing. And of course, Nigeria, other sub-Saharan African countries, and other countries in the world, particularly those with low or very low ratings in their debts, suffered disproportionately. They had needs, particularly because of the shocks I described earlier, and the cost to finance those needs really increased. So that is the nature of the squeeze in financing that we observed to the global economy, particularly to those countries.
You know, Nigeria and most of these countries have racked up, so much debt over the years. Looking at, development right now in Nigeria from infrastructure and all of that, have the monies been spent judiciously?
That's a very important question because at some level, if there are shocks to the economy, you need to keep continuing with recurrent costs, such as salary payments, servicing of debt. So there are some costs that always need to be expenses that always need to be financed one way or another. For additional debts, you really need to ask the question on the use of the proceeds and how well and effective they were in generating tax revenues and growth, because ultimately those debts will have to be repaid. So it's a critical question to all our economies, the absorption of those loan proceeds in terms of the uses of those proceeds to make the economy grow and generate revenues to be repaying those debts. And that the record may not be as strong as one would expect. And we see that because revenues have not grown at the same speed as the borrowing that has been done. So it's very critical to make sure that the projects or whatever expenditures are being considered, the rate of return of those projects is higher than the rate of interest paid to borrow those funds. Otherwise, there is no need to borrow because it will make the economy worse off. I think that going forward, paying a close attention to project management, absorption capacity of the economy, and relying on your own resources, particularly on domestic tax revenues rather than borrowing, would be essential.
And looking at countries like Nigeria now and some sub-Saharan African countries, what should they be doing now? How do you position at this time with the risk of external loan taps being shut off? What's the way out of this at this time? Because there's still budgets still need to be funded going forward.
True, it's a difficult situation, but like in a household, when financing dries out, what do households, families do? They try to contain spending, make sure that the spending is only on priority levels. Now, of course, in Nigeria, spending is already very low. So in reflection of that, it's really, really important, an existential issue, in fact, to mobilize more domestic revenues, improve tax administration and tax policy, plug in any leakages to the tax system, make sure to broaden the tax base so that collections can increase and therefore reduce financing needs. One essential element of this is, for example, fuel subsidies. Fuel subsidies need to be removed to reduce the financing needs and therefore the deficit, the fiscal deficit. So there, if you do that, there is a chance, and pretty convincing chance, that the situation will improve simply because your financing needs will decline, and therefore you don't need to rely on so much debt as you have been relying.
All right, Mr. Eisen, what are you seeing for growth, your growth projection for Nigeria in 2023?
So this year we are expecting a little improvement vis-a-vis last year. We are projecting 3.2% growth for 2023. And this is on the back of an improvement in oil production. Last year was a very negative year in terms of oil production, because of oil theft, because of other leakages, because of underinvestment. But we have seen the start of this year improving significantly in terms of the oil production. And hopefully that will continue. The last month was not as good as the previous one. So it's a continuous challenge to ensure, a task to ensure that oil production continues to grow. Other than that, the service sector, ICT, agriculture, retail trade will continue to be supportive of economic growth in 2023. And hopefully growth will be even higher than 3.2%. That's what we are all expecting. For Nigeria, importantly, growth should be dividends to all the population, as inclusive as possible through job creation.
All right, I guess we'll keep watching out for that. 2023 already kicking off really hard right now in the global economies. But thank you so much, Mr. Ari Eisen, resident representative, IMF right here in Nigeria. Great to have you. Thank you.
Thank you very, very much. Thank you. A pleasure.
All right, still ahead on Business Morning. As the federal government introduces new taxes, what impact will this have on an already squeezed manufacturing sector? That's our next conversation. Just stay with us. Welcome back. Well, the Nigerian government says it's planning to increase the tax ratio to GDP to 15% from 8%. That's 2022. Federal government has introduced new fiscal policy measures for 2023 in a circular. Some have tagged it President Buhari's parting gift, to Nigerians. Well, joining me now is Mr. Akin Oyediro, Managing Director, Jubilee Syringe, joining me right here in the studio. Great to have you on the show.
Thank you very much for having me.
Yeah, so it's been tagged the President Buhari's parting gifts, and
correct.
Definitely, I'm sure you manufacturers already pay a lot of taxes.
Correct.
Right now. Can you paint a picture of what those taxes are currently?
We pay our taxes. It's pretty high. And for a country that is trying to use manufacturing to increase its employment, is really not encouraging. However, if the taxes are not even... if the taxes are used to increase the infrastructure, then it would be a good thing. Currently, right now, what we have is we have very poor infrastructure. We have, of course, everybody has the situation with the dollar rates. Everybody knows the situation with unemployment and all that stuff. So the tax increase is going to be a little bit of a higher burden to us. However, if those taxes are used to increase or improve the infrastructure, then in the long run, it will work for us.
So that means you don't have a problem with, taxes going up, right?
Nobody has a problem.
More taxes.
Nobody has a problem with paying taxes as long as you have a level playing field where you can actually generate revenue and make profit. The problem is when you're paying taxes and also squeezing into your ability to make profit. That is where problems happen. So if the taxes are increased, however, we have a situation where we are able to get better infrastructure and better incentives for the government to increase production, sell, and also better better foreign exchange, then nobody cares about paying taxes when you're making money. It's when you're not making money that you worry about taxes.
Right. And I know you're in the pharma industry.
Correct.
You know,
and medical device.
I go into, a pharmacy, I buy something at a particular price today, tomorrow, it's sky high again, more increase. And it's becoming a consistent, pattern right now. We've been battling inflation, since 2022 globally, but this one seems a little too much. What's going on in that industry?
Well, what's going on in the industry is that one is a very highly technical industry. Two, a lot of even our raw materials are based on imports, so the effect of the dollar affects our prices. And three is just to recoup from research and investment. To recoup from research is you just have to amortize it over a period of years and continue to recoup from that investment. So the investments are high. At the same time, you have high inflation. At the same time, you have high interest rates. At the same time, you have dollar rates that are sky off the roof. So those are the factors that lead into the high prices. Actually, when you compare the price of medical devices and even some medications here in Nigeria, it's actually cheaper to buy here than to buy in some parts of Europe, West Africa, and the United States, actually.
And talking about that, we did talk about, prices and, a preference to buy things look internationally than here, because those ones seem to be more affordable for. And talking about quality,
well,
there's more quality. There's that perception that you get more quality stuff when you buy it outside the country.
Yeah, there's a perception, and there's some truth to that. However, in our case, as Jubilee Syringe, what we've done is we've opened up about 5 years ago. We started up our own manufacturing company to manufacture syringes. And we've invested very heavily in making sure that we produce very high quality syringes. As a matter of fact, our syringes are the best in the marketplace right now. And, to the glory of God, of course, it's very acceptable in the market and we're selling very well. As a matter of fact, companies or different parts of the world are actually asking to import our syringes. We're already shipping to some other parts of West Africa, and we're competing very well in those areas. However, what we just need to do now is just to get people to realize that because it's made in Nigeria doesn't mean it's inferior. Yes, there are some made in Nigeria inferior products. However, look, I'm very involved with MAN, the Manufacturing Association of Nigeria, and one of the biggest parts of MAN is to try to ensure that its manufacturers are actually producing good quality products. And it only just makes sense. If you're producing good quality products in the marketplace where people are not, you will also dominate the market, which is why Jubilee is doing so well in the syringe manufacturing industry.
And definitely, if you're trying to, export goods at this time, you definitely have to make sure quality, is on point. If not, the outside markets will not accept it. And looking at the AFCFTA a trade deal at this time, what are you guys doing to make sure that we can actually, benefit from this trade deal? Well,
we jumped all over it. It's a good thing for us, as the trade agreement is a really good thing for us at Jubilee. Because right now we're piggybacking on it to export to the rest of West Africa. It makes it easier and better for us to compete with our competition, which is from Europe and China. Now, we have good quality products. We are putting them into the marketplace and people are buying them. However, if you want to compete with us from China or you want to compete with us from Europe, then guess what? You will now have to pay the tariffs. You will have to pay the transportation costs from Europe or China to compete in my marketplace, which is West Africa. So for the very first time in the history of business in the world, it pays to manufacture in Nigeria and sell to the African market because of this whole agreement. It is an exciting time. It is great for us because it allows us to do the things that we always knew that we could do. Now, what we are just looking at is for government to continue to support that agreement by providing infrastructure and let private industry take over.
And talking about the government at this time, we have an incoming government.
Correct.
What would you like to see? First 100 days that is going to benefit manufacturers.
First 100 days, what we'd like to see is a commitment to developing the infrastructure, working on something that interest rates and forex will not happen overnight, but we just want to see policies and direction that would make it work. We don't need to see the naira gain value on day 3, but we want to see policies that will help us to get there. And based on the experience we've seen in Lagos, I think we're on the right track with that, actually.
And what do you see? Definitely, it's been a tough first quarter for businesses and industries right here in Nigeria, and definitely we've started to see that there's now cash available at this time. What are you seeing for second quarter? Because I know first quarter was quite tough.
First quarter was quite tough, and it allowed us to really start to innovate and think. And one of the things that has come out of that first quarter quagmire, if I can call it, is that we realized that, look, if we want to really do well in our business, especially in our manufacturing industry, we need to export. So companies are going out there looking for ways to export into the African and West African market. So that's one. As far as making sure that what are the things that we want to see in the second quarter coming up, we see a transition into a second quarter. Cash is beginning to become available. We're all looking forward to the installation of the new government, because we're going to see the policies come out. So I think it's an exciting time. I think we've gone through the worst. I really think we've gone through the worst, and it's allowed us to think and innovate. When you go through certain things, you go out, sit down, think, innovate, and then come back to the market.
I guess, for us, what doesn't kill you makes you stronger, I guess.
Well, what doesn't kill you makes you get out there and think.
Okay, that's another one.
Yep.
All right, thank you so much, Mr. Akinyoyediran, the MD Jubilee Syringe. And I definitely hope, the manufacturing sector gets it easier, going forward in 2023.
Thank you very much.
Thank you.
All righty.
All right, so now let's take a look at what's happening with the markets now. We see last week was quite subdued at the local bourse market. They're talking about the NGX. It's a brand new week. Wonder what's going to happen next. And talking about what's going to happen next, we have Anyete to give us those details. Great to have you, Anyete. Happy New Week. And I'm hoping it's going to be a better week than last week.
I'm quite a surprise. It's the third week off.
All right. Okay. Hold on there. I think you have a little. You need to turn on that mic in a little bit. So yeah. So as Adita was saying there, the market obviously we're expecting better outing right here for the NGX. This week was a tough week last week, and obviously we've seen that bearish trend. In the local bourse, going forward, we've lost critical levels on the all-share index all the way from about 54,000 to about 52,000 level. And definitely we've seen the markets and investors react to all of this. We've had incredible first quarter earnings. And Anyete is back again to bring us those deals. I'm sure we've sorted out that issue right there.
We had a bit of a technical challenge.
You had no voice at that time.
Exactly.
But your voice is back.
Yeah, my voice is always back. Just a temporary loss there. Yeah. Okay, so, I'm going to talk about the four markets. First, I'll start with the Forex market, as well as the fixed income market, the equities market, and the unlisted securities market. But, first, it was a mixture for all those markets. Unfortunately, we won't be able to give you that on the screen, but I'll be talking the markets as well as talking to analysts to give us more details about the market. So the Forex market, we had an improvement in contrast to what you had in the previous week. We had a 182.20% increase in terms of the transactions carried out at the Forex market on the FMDQ exchange. We had about $1.069 billion worth of transactions carried out there, and that's thanks to more than 641.58% increase on the FX derivatives spot of that market. We also saw the futures contract. It also increased by more than 730% at $367.25 million. At the FX spot market on the FMDQ, it was up by 111.78% at $695.77 million. So that's it for that market. And then at the Nigeria Autonomous Fixing, we had the Naira, it fell by about 0.41%, and in contrast to what it was before, which was 462 Naira 70 kobo, it lowered to about 463 Naira 34 kobo. So that's it for that market. And then for the bonds market, we had bullish sentiments that we saw in various investors cherry picking, on the attractive views across the curve, particularly the mid and long tenor of that market. Then moving over to the Treasury bills market was also bullish sentiment. Now today we will be having two things on our radar. Well, first of all, we're going to have the bond auction by the Debt Management Office, where the government is seeking to raise about 360 billion naira to fund its budget deficit and other requirements. And then, of course, we will be having, as from 12 p.m., the inflation data, where we'll be expecting that our inflation rate will be increased higher to a fresh 17-year high, in contrast to what you had, about 22.04%. So we're expecting more than 22.6%. So now to give us more details about that, let's talk to our analyst, Senator Audu. Senator Audu, can you please give us more details about the market? What are we to expect for the inflation data, for the bonds market, as well as the outcome of the Treasury bills market auctions last week?
Thank you, Aneti. Thanks for having me. So as you rightly said, the NBS, the National Bureau of Statistics, is expected to release the inflation figures today. As you rightly said, the previous figures we received, those are the figures for March, came in at 22.04%, a 13 basis points increase from the 21.91% that we witnessed in the preceding month. For today, we expect the inflation rates to close higher. As you said, we expect a fresh high, but we still expect the inflation rate to remain in the 22% levels. With regards to the reaction of market players to this expected data, a lot of market players have already priced this in. So we don't expect any real, we don't expect market players to be rattled in any shape or form by these results. For the bond auction, there's an auction today. The DMO is expected to offer about 360 billion across 4 maturities. We have the 2028s, the 2032s, the 42s, and the 50s. Those are the same bonds that we offered at the preceding auction. At that auction, we saw stock rates for these 4 bonds close at 14, 14.8, 15.4, and 15.8% respectively. With regards to our expectations around this auction, we expect that the rates would remain largely at those levels. Our expectations are informed by the fact that in the secondary market, we've not seen these rates trade significantly far from the stock rates at the auction. You mentioned Treasury bills. For Treasury bills, all the action came late last week. We had the auction on Tuesday where we saw rates drop across all the standard maturities, the 91, 182, and 364-day bills. I'll quickly take you through the stop rates. Stop rates for the 91 came in at 4.5, for the 182, 6.44, and the 364, 8.99. They all dropped from 5.38 and 10.17%, respectively. With regards to how the market should trade this week, again, you said from midday we expect the inflation figures. So although I mentioned that these expectations had already been priced in, we don't expect market players to be significantly rattled by these results. So we expect a calm market with the auction taking the spotlight, while market players exercise some caution across the curve.
Okay, Senator, thank you for that analysis. And of course, our eyes are always on the market, and we see how the market turns out at the close of today's trading. So that was Senator Audu, fixed income dealer at Access Bank. So, Ladi, time is never your friend. I always say that. But let me just give you closing for the market. For the equities market, it was down 0.48%. And for the unlisted securities market, it was also down 0.24%. But the activity levels were on the upside.
All right, we'll look at for what happens this week. Fresh, brand new week. Thank you so much, Anete. All right, let's head on now to the UK. Let's see what's happening there. We have Juliana standing by. Great to have you, Juliana. So we see hedge funds flip to become most bearish on the British pound since 2021. Looks like the pound status as the best performing group of 10 currency this year may be under threat right now.
Yeah, that's absolutely right. Good morning, Laddie. The pound has witnessed a phenomenal rally over the past couple of months. I remember if you go back to September last year, the pound was almost at parity with the US dollar. I think Liz Truss and her tax-cutting plans pushed the pound to about $1.04. But then in recent weeks, we've seen it go to highs to about $1.26. This has been boosted by pretty strong data coming out of our housing market. And also the fact that we managed to avoid a recession. The IMF, the Bank of England, even the government's own Office for Budget Responsibility said that was going to happen. We're not yet, even though the economy has kind of been limping along. But as you quite rightly said, according to Bloomberg and the Wall Street Journal this morning, some of those highs that we've witnessed in the pound are set to be lows, and that's because of interest rates. Now, we know that last week the Bank of England pushed it up 0.25%.
Yeah, I was still trying to hear from Juliana there. Looks like we'll have some technical issues. Okay, I can hear you now, Juliana.
You can hear me now.
Oh, fantastic.
I don't know when you wasn't hearing me, so I don't want to repeat too much of what I was saying. But basically, high interest rates in the UK are not great for the UK economy as a whole. We have seen mortgage holders, particularly those on variable mortgages, in the past year, their monthly payments have been pushed up by about $400.
All right, looks like it's happened again, Juliana. I don't know if you can hear me now. Yeah, okay, yeah, still having some technical glitches. Okay, Juliana, I think you're back now. I think you're back now. I think we're going to give it another go. You can finish your thought.
Should we give it another go?
Yes, let's give it another go.
You can hear me?
Yes, I can hear you now.
Wonderful, wonderful. I don't even know where we were. We were talking about the British
wrap
pound,
up on that one,
which was seeing lows. It was seeing lows of $1.04 during Trustonomics. Now we're seeing $1.26 because of a boost in the housing market and the fact that we've just avoided a recession. But lots of American economists are suggesting that high interest rates in the economy are going to squeeze the pound to lows that we hadn't witnessed for about 6 months.
Now, I'm talking about escaping, recession now. Forecasters are saying that the UK economy is going to grow in 2023. We did get some gloomy forecasts much earlier, but now it's getting brighter.
Saying about the British.
All right. I guess, yeah, it's official now. Still technical issues there. Well, Juliana, I guess we'll have to try this again, maybe at 1:30. I'm sure okay, I think you can hear me now. But I feel we'll have to try this again at 1:30, Juliana. What do you think?
I think we pick it up at 1:30.
Yeah, we'll pick it up at 1:30. All right, thank you so much, Juliana. We had some technical issues getting her to tell us about what to expect for the UK economy in 2023. All right, let's take a look at what's happening with other markets. Now, we see Bitcoin there did have a rough weekend. This weekend, we see Bitcoin is trying to recover above the 27,000 resistance zone. Bitcoin must clear that 27,800 level resistance to start a decent increase. Look at the fear greed index. There's neutral right now. 50 points is what we're seeing. I'm talking about the fear greed index in the crypto market, showing that investors are less greedy than they were a few weeks ago. So now we're seeing neutral. Who knows? Maybe fear might be next. Let's look at the top cryptocurrencies we track. We see Bitcoin there up 2.32%, $27,482 there. We see Ethereum, that's up 1.41%. Not looking bad, $1,832 right now. BNB, $315. Up 0.88%. It's been a lot of pressure on Binance, the native coin for the Binance exchange there. It's been having quite a tough time. We're seeing a lot of pressure on the price. Looking at the top gainers now, we're seeing double-digit gains, about two cryptocurrencies there. CFX, 28 cents, up 12.58%. That was a Chinese token starting some kind of bullish run this time at 28 cents. SWI, that one, the recent one that got launched and shared as an airdrop to some investors there, $1.22, 10.24% up. That's what we're seeing for SWI. Litecoin, that's $87.04. That's one of the legacy coins there. It's not doing so bad this morning, 6.85%. And we see TON, that's the Telegram one there, TON coin, almost $2. Up 6.54%. So we see the market trying to have some kind of recovery after a rough week last week, but let's see if this recovery is going to actually last. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Great to have you.
Good morning, Adi. Good morning.
Yeah, top of the morning, Rume. So what economic data, market-moving economic data are we expecting that's going to drive sentiment in the crypto market this week?
Ladi, the truth is a lot of things are happening in the space. Last week was so terrible. At some point, a lot of persons were even looking at the market going to about 25K, 24K, being tough. Banks collapse here and there. But this week looks really favorable in some sorts. We see Bitcoin now at 27,400, thereabout, and Ethereum actually moving really well. I'm actually considering a couple of things, considering the fact that regulation issues are still there. Binance is about leaving Canada. A whole lot of exchange platforms are leaving the US to Bermuda because of regulatory concerns, because the regulators are actually not regulating per se, but strangulating, if you ask me. But at this point in time, the economy, the global economy is actually right now looking towards the US, and the US debt limit is actually being discussed. Last week, the meeting couldn't hold because it was postponed to this week, and a default in the debt ceiling in the US is going to become very catastrophic for the entire global economy. Also the fact that the recession discussion is not really out of the way. Actually quoting Jen Yellen, that it is going to be really, really catastrophic. And like I always say right here on this platform, the crypto economy, the Bitcoin economy is not in isolation. So anything really coming up now is not going to really tell well. That is why I always speak up to say that people should be really careful. For adventure, we can see the bulls, which is most likely institutional investors pushing Bitcoin to as high as 28, 30K, even 31K, as the case may be. But the truth is, the global economy is not looking really good right now, and risky asset is at risk of seeing some very huge downside, because people are going to prioritize the very basic things of life, food, shelter, and a couple of other things, rather than getting into Bitcoin and cryptocurrencies.
And rather than looking for any bullish sentiment in the market, you want to eat first, I guess. All right, Rumi, let's look at this whole regulation issue now. We're seeing, most of these crypto companies and exchanges, leaving the U.S. We've already seen one left Canada recently. Do you think the crypto industry can survive regulation in 2023?
Ladi, I think the crypto industry will survive. This is the reason why I think so. A lot of persons actually came into this space with the idea that this cannot be regulated. This shouldn't be regulated. In fact, even back home here, a couple of OGs, so to say, believe that there's no point regulating Bitcoin and some other cryptocurrency. But the truth is that there should be some kind of regulation that will manage all of these. Considering the fact that there could be money laundering, terrorism financing, and a couple of other things, child trafficking, all of those things being used, crypto being used to finance a couple of those things. So if there are no regulations, these things could really fly. Then also irregularities in the space. You must have seen what have happened in the past with Duquan moving money. Resulting to about $40 billion collapse of the platform, Terra Luna, Terra Labs, UST, and a couple of other things. So if there's some kind of regulation that guides all of this, you see the case of FTX, it's very clear that this space is so nascent, and if there's no kind of guidance, it could go so bad.
Right.
Coming back home in Nigeria, we've seen and heard about a couple of projects in the past that just float and rug pull people. When I mean rug pull, these projects are designed to fail, right? So they encourage people to get involved in it, more like Ponzi scheme design, and people feel that they could make a whole lot of money from all of this, and at the end of the day, this platform goes away and they lose their money. And but this is also why we need regulation here, and some of those people involved in such deals to be called to attest for that, even here in Nigeria.
Right, so much to do at this time. You need to research before you invest in any asset class. But thank you so much, Rume Ofi, financial market analyst. Thank you.
Thank you very much, Vlad. It's my pleasure.
All right, so thank you so much for being with us today. That's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube, search our videos. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.